Let me just get myself together. We should be okay. Right. Welcome everybody. And again, as people join, what I'll do is just add them to the chat or the meeting. For you guys who don't know me, let me get rid of that for a second. I'm Neil. I run Exponential events. We've been running, we used to run events in the city up until last year when everything closed down. Since 2017. In 2019, we had over 2,000 investors come to our events in the city. We have the reputation of being the go-to event for startups, early stage companies in town or in the city. Obviously it's been curtailed a little bit and we've been quiet over the last couple of months, although we have gone virtual and we continue to do events. Our main focus is literally facilitating investment into startups through our investment network, people we know. My business partner who's on here is Craig. He's in Dubai. So literally what we do, and people who do know me, is we put potential investors in front of companies who are looking to raise money. And we've done it very successfully over the years. In fact, a number of companies that we now do business with, we've raised capital for, and we continue to raise capital for going forward. So we don't look at ourselves as an event company. We look at ourselves as literally a capital raising organization. My events aren't in, or my background's not in events, it's in financial services, private equity, as is my business partner, Craig, in Dubai. Although we've got to say a reputation now for holding some of the best capital raising events in the city. Now, I don't want to waffle on too much. I'm going to share this little deck with everybody going forward. We've got a chat session running, I hope, says he. We should have a little poll running as well. Oh, it's Tim. What we're going to do, we'll hopefully run a general pitch is around 5 minutes. So the chat session's open. So any questions investors in the audience have, I suggest initially they just pop a little simple I want to speak to, Joe or Neil or Jeff or Stephen in there, and then we'll run those out afterwards. You can also chat via direct. So if there's something you're interested in, you don't want to share with anybody else, you can send the individual a message. We're recording this, so you'll all get a copy. Again, every company can share their pitch decks via the chat. And we'll get started, I think, unless there's any other questions at the moment. No. Okay, good. Right, so I think as far as I'm done for now, I'm finished. Osama, are you there?
Yeah.
Right, now I'm going to stop sharing my screen and hopefully open up this thing to everybody. Screen, give me 1 second. Multiple positions can share. You should be fine. So welcome, Osama from Let's Go.
Thank you very much. Let me just pull my deck as well.
Okay. Can I ask anybody who's got their mic open, and I should shoot mine off, just to mute them for the moment, if that's okay with you guys.
All right. Thank you very much, Neil. Shall I start? Hello. All right.
Yep, got your screen, no problems at all.
All right, great. So hello, everyone. I'm co-founder of Let's Go, a startup that aims to change how you socialize in real life through ease and comfort of small groups of people doing things that they enjoy. So the existing platforms for socializing in real life can be divided into 2 categories. So the first category is event discovery apps, for example, Meetup, Facebook events, Eventbrite, and Design by Night. These platforms provide a really good medium to explore what's going on and organize events, but they fail to do a good job in terms of providing a platform to connect with other attendees. On the other hand, we have got dating apps like Facebook Dating, Bumble, and Tinder. And many people use these apps for socializing or making new friends, but these apps really are not designed for that purpose, even though some of these companies have explored certain options like friends and travel options for some of their audience. So Let's Go is a platform to connect and meet up for activities in a way that is simply not possible today. There are some niche platforms that allow you to socialize for activities, but these platforms do not have enough to get to the escape velocity and takeoff because of their niche demographic. So Let's Go allows you to meet up with like-minded people for an activity, where activity could be anything like an event, a concert, or an online pub quiz, or it could be something more casual like a run at the park, a bike ride, or a yoga session. So the app allows you to socialize with like-minded people through shared experiences, and you can browse for nearby meetups on the app, which are powered by a recommender system to match your interests. The app also exclusively focuses on up to 8 participants, and the idea for that is we focus on smaller groups to promote meaningful and direct exchange. The business model is basically based on 2 revenue streams. The primary revenue stream is B2C, based on freemium model, where as a free user, we show you ads and restrict some of your features on the app. For example, the number of meetups you can apply for, or invites you can send, and the requests you can see. And the second revenue stream is based on B2B, based on interactable featured content. So this allows businesses to access local user base through targeted featured events or promotions, or even venues as well. So the founding team consists of myself and Ruben. We both have extensive background in various startups and met as PhD students at Imperial College London 3 years ago. And one of our strongest capabilities is to build a scalable app and quickly iterate over the product, which is key for a startup like Let's Go. So we rolled out our open beta in September, and we had our first more than 200 organic users, and have had great feedback from them, with more than 24% daily active users on average, and more than 25 meetups hosted. And over the past month, we have seen loads of activities around online meetups. And for us, the next stage really is to focus on the rapid growth in terms of partnering with influencers and universities specifically. So the app addresses a growing problem in real life socializing, which has only gotten worse due to the pandemic. And at the same time, it provides us with an opportunity to grow rapidly in the coming days by providing a platform to meet in small groups safely, especially in line with the rule of stakes as well. And the other point is about the freshers activities, especially this year, since the usual activities are pushed to early next year. The students this year face an increasing challenge to socialize among their peers due to the lack of usual social activities. And we are raising pre-seed at the moment, which is SCIS and EIS eligible under advanced subscription agreement in partnership with Seed Legals to basically sustain the growth as well as to accelerate the marketing effort. We do plan to spend mainly in terms of marketing. We plan to spend in terms of marketing in the area of partnerships with influencers and university unions. And our plan is to basically get 50,000 users by early 2021 and 500,000 users by the end of fall of 2021 as well. So the long-term vision really is to lead the way in the area of real-life socializing. We have got some very exciting updates in the pipeline for our January launch, and yeah, feel free to reach out if you want to know more about us and our future plans as well. Neil, that's it for me.
Summer, thanks very much. Right now, as I say, what we're doing, folks, as we go along, there's an open chat. Summer, if you'd like to share your deck, or if you
Yes,
can,
definitely.
you pop it in the chat, save it as a file, and knock it out to everybody. We will be, as I say, we're videoing this anyway, but we'd also be opening up all the pitch decks to the audience via our Dropbox
Yeah, well,
link after the event.
definitely.
Hang on a minute, excuse me 1 second. I keep people coming in. Who's beeping over here? There we go. And as I say, any questions and answers, we're going to rush. Well, I say rush through. We're going to run through these presentations within reason as quickly as possible, with the view then that people can, as I say, post questions in the chat room for each individual presenter or founder, and also if they want to keep it private, they can. That's not a problem. You just click on the Zoom thing, find the person you want to mention something to, contact them direct, and then we'll run a sort of an open question and answers afterwards for the people who've actually posted something directly as a question to, say, Tim or Alan or whoever it might be. Yeah. So
Yeah, I'm happy
I'll
to take
do
any
that.
questions at all, or maybe.
Yeah, Simon, can you just cancel your screen share for
definitely.
me? Right, and that should open it back up. There we go. Thank you very much indeed. Like the bike, by the way.
Thank you.
that's the great thing about all these Zoom things. Yeah.
Yeah.
You get to see everybody. I got a friend of mine who runs the BBC News, and he's loving it because he's interviewing all sorts of people, and every day all he mentions is the fact that he's looking at their books and what's in the background and everything else. Yeah.
Yeah.
Right, Alexi, are you there, sir?
I am here. Can you hear me?
Right. Yeah, I can. You've got the show. You should be able to share everything.
All right, let's see if I can bring
so everybody, this is Lexi from Alpha Seeker. Lexi and I have been working together for a little while. Oh, see Daisy, there we go. You got it. Yep. I'll let you carry on. Welcome.
Hello, my name is Alex Merkin, and I'm the founder and CEO of Alpha Seeker. We analyze stocks with AI and pick winners. Our mission is to deliver quality investment advice across all income levels. Did you know that 95% of traders lose money? Let me tell you a story about how I made my first trade about 20 years ago. I had a bit of spare change and decided to invest into a health stock. Bought a few shares of Oxford Health Plan, went away for a little while, just to find out that I lost 33% of my capital upon the return. This type of story is heard too often in the traders community. Inexperienced traders need help choosing stocks and tracking their goals. They need help knowing when to let go of a toxic asset. We have developed an app for the iPhone that will help ambitious investors make money. The secret sauce that differentiates us from the competition is our unique recommendation engine we use to profile stocks. It provides frequent recommendations backed by 15 years of data research. The direct online investment market in the UK is 200 billion. Mobile app direct invest is about 10% of that. The competition has some heavy hitters. We got Nutmeg, Wealthify, Revolut, just to name a few. This is how we fit into the landscape. The business model is a half transactional, half subscription. We plan to charge a very light commission on trades and charge a subscription fee for premium analytics and priority support. So we have designed a user-friendly interface that users like and understand. Our portfolios outperformed the benchmark by 2 basis points, and we got an excellent support network to help us get through the launch. The timeline is we're going to do a product hunt demo launch fairly quickly. And as soon as that gets done, we're going to apply for the FCA license. And depending on how that goes, that will kind of drive the date for our official launch. So the team, I'm doing all the DevOps, and we got Sarah. She's helping with the UX design. She's a mercenary, and we're looking to fill the team. We're kind of involved with a few programs right now, and expect to have the complete team filled before the crowdfunding round. We're looking to raise £800,000 for 20% of A shares in order to go to market and get through the licensing phase of it. Thank you very much. If you need to reach out, don't hesitate to contact me on LinkedIn or email me directly.
Sorry, I got my mic off. Yeah. Can you hear me?
Yep.
Okay. That's great. Again, we'll run on. Any questions, please? I just ask people to pop them in the chat, or again, contact Alex direct. You just, for those who haven't used Zoom before, you just go into chat, you pick out who you want to direct a message to that's private. I don't get to see it. Nobody else gets to see it. It's the same with our poll. It's completely anonymous. It's just for our information at the end, so you know who you like. We don't publish the fact that so-and-so likes Alex more than Joe or anything else. So thanks very much for that. Now, Alan, are you there, sir?
Yes, yes, I'm here.
Right, we have Alan Jones from EO Messaging. I won't give you any more introduction than that at the moment, other than let you get on with it, if that makes sense.
Great.
So
we're going to, Sarah, my co-founder, is going to be showing the screen. So my name's Alan Jones. Welcome. Hello, everybody. I'm the CEO. I've had previously 4 startups, 4 successful exits. So this is the 5th that we're hoping to get away. Sarah has international brand management experience, and Alan Wilson, our COO, is also on the call. Alan has 25 years of investment banking experience with Barclays, JP Morgan, etc. We're going to run a brief video which explains the product.
We all use instant messaging in our day-to-day life, and we're now using it more and more for business. The question is, can we trust it? Is our content secure? We rely on trust, but we lose control the moment we hit send. And most popular messaging platforms do not meet compliance or legal requirements for use in business. Until now. Yo, the next generation secure private messaging platform for businesses, their customers, and individuals. Yo uses continuous facial recognition, so content can only be viewed if your face can be seen by the device camera. We authenticate the recipient, not just the device, which means if the app doesn't see you and verifies your identity, then you can't see the message. All messages are encrypted from the moment they are sent to the point that the recipient is verified. You can send images, videos, and files safe in the knowledge that no one but the recipient can access and view. You can select to geofence your message so you decide where the message can be read, so you know where, when, and who is reading your message. Yo gives you back control of your content. No forwarding, no sharing, and no screenshots without your permission, and you can delete your content from the recipient's device at any time. The Yo Library feature allows you to securely store private files to share on your profile for your contacts to see, or in your private folder for your eyes only. Business and pro users are able to meet corporate compliance and regulatory requirements with encrypted backup and admin control for setting digital rights. Your privacy is what gets us up in the morning, and your personal data is not shared with any third party or used for commercial gain. Your messaging, privacy, security, control. You get the message.
So basically, just to recap, Yo is the only product in the marketplace today using continuous facial recognition for authentication through the message. That means that nobody else can pick up your phone and actually start reading your messages, even if they know your PIN numbers. We use double ratchet encryption, so we're encrypted from the moment you send to the moment you receive, and we apply most of the other disciplines from general messaging platforms. On top of that, what we do is we give complete digital rights management to the sender. So that is that you dictate the terms on what how the message can be read, such as where, when, how long. You can also set this up as a corporation so that you can send messages and dictate that they can only be read in your offices, for instance. Target audience is business. We have a free to consumer model and a SaaS model for business users. There are a plethora of uses, everything from wealth management to established use cases in healthcare, crisis management, legal, etc. Last year, we were selected as one of 8 companies for Cylon London's Cyber Accelerator. And at that point, we were selected to do a crisis management communications package with Axis Capital. We are working with the Rhinoplasty Society of Europe, which obviously with faces, etc., they are key for privacy, legal applications with 3 different legal companies, and also a cross-border solution where we actually validate drivers in association with customs and movements as well. You'll also see some references there to press coverage that we've got. We're backing up our management team with a broad-based evangelist board, each a serious player in the vertical market that they represent. People like Paul King recently joined us. He's the CSO of Cisco UK. Rosette was the CMO of Tinder. And we've got NASDAQ people, as well as Charles East and Lydia Bedia, both senior consultants and renowned rhinoplasty professionals. The financial forecast next year, we really begin to roll out. We're conservatively forecasting only 42,000 paid users next year. We hope to smash these numbers, moving to 400,000 users by 2023. It's a very small portion of the paying messaging users today in the market. So we feel confident in the numbers. We have already got the traction that should see us successful at this rate. Our ask today is we are looking at a $2 million seed raise. I'm using US dollars, but I know we've got a mixed audience here, basically on a valuation of 10 million at the moment. We did a previous friends and family raise at a £5 million pound valuation last year, beginning of this year. That's it. As I said, my name's Alan Jones. We will post to you the details so you can connect with us. The video is up on YouTube now, and we're happy to answer any questions at all. Thank you for the opportunity.
Alan, thanks very much indeed. Do you have a minimum investment? This is just a quick question for myself.
Well, at the moment, we've set that at around 25K, but to be honest,
sterling or
sterling.
I mean, to be honest with you, it doesn't make much difference these days, does it?
No, it doesn't actually. But yes, we would like not to get to too smaller packets, basically.
Yeah, you're not crowdfunding, obviously.
I want to spend my time on
No,
the
that's fair
business
enough.
rather than managing lots of very small investors, basically.
Okay, of course. If you'd like to, obviously, can you, as I say, I'll share all the pitch decks to everybody anyway, but if you just want to share the file in the chat there, you should be able to go in the chat and then find it on your computer and just copy the file into the whole chat.
I just shared that.
Don't worry if you can't. I've got it, but sorry.
Yes,
comments?
I've just shared that from Sarah. I've just shared it on the chat for everybody.
Okay, so Sarah, thank you. That's great. Okay, well, we'll run, as I say, we'll run through this and then we can sort of have little chats afterwards and run it on from there going forward. So where are we now? Douglas, are you there, sir? Douglas and I have been a couple of events together when we used to ram the city. Nice to see you again, sir. Huh? They were. Hey, we're going to get back to them soon. I really do.
Very optimistic.
Okay, you've got to be. You've got to be. I haven't seen my wife and daughter since February.
Oh God, really? That's
yeah, they're in Thailand. I can't get in. So sorry, Douglas from Double Wing Health and Beauty. I'll open the floor to you. I'll cut my mic out so I don't.
Very good. Thank you, Neil. Good evening, ladies and gentlemen. My name is Douglas Andrews. As you know, I am the co-founder and executive chairman of Double Wing Health and Beauty, which is a company that provides a scalable omni-channel marketplace for European cosmeceutical products, which are natural personal hygiene and wellness products, in the 10 billion pound Chinese market, which is now emerging from COVID-19, much more so than anywhere in Europe or in the United States. We're launching this business as the exclusive Chinese partner of a leading Italian producer of herbal cosmetic, personal care, and nutritional products. Cross-border product launches are planned for February 2021, and offline B2B launches are planned from the third quarter of next year. We are looking to raise between £500,000 and £1 million during the next couple of months, and between 3 and 3.5 million next year to bring the company to positive cash generation in 2022. We have received EIS advance assurance from HMRC, and the probable exit for investors could be either an IPO, a trade sale, or consolidation with an industrial partner. My co-founder and I, William Wang, who have been working together since 2009 on various projects in China, have collectively had decades of hands-on global experience in pharma, medical device, and consumer healthcare markets. In my own case, I've been in this arena for over 40 years. The first half of my career was as an executive with the American pharma multinational Schering-Plough, now known as Merck, and subsequently founded and sold 2 generic pharma companies and 1 medtech company prior to co-founding Health and Beauty. Prior to joining with me in 2009 in a previous venture, William had already established strong government relationships as a senior trade investment representative of the Western Australia trade market in China. And before that has had extensive experience in foreign trade mediation. The opportunity for the company and its investors is very clear. It is a rapid entry into the world's largest and fastest growing cosmeceutical market. Ever since 2014, where you can see this enormous spike in sales, that is the year in which the Chinese government introduced cross-border e-commerce and made it possible, very easy for foreign companies to enter the market. And in fact, ever since then, the market has been growing at a compounded annual rate of 15%, reaching the estimated level today of 10 billion pounds in value, and over half of that growth has been driven by imports from Japan, South Korea, and to a slightly lesser extent from Europe. This opportunity has in fact also been compounded, ironically, by the impact of the COVID-19 on the Chinese market. What it has done is it has reinforced the prejudices in the minds of many Chinese consumers against locally sourced natural products because of issues of environmental contamination and product adulteration. But even more so, the pandemic has exponentially increased the amount of online shopping in China, just as it has around the world. The difference being that pre-pandemic China was already the world's largest e-commerce market, and COVID-19 has merely accelerated that trend. In fact, online purchases of personal care products and cosmetics grew by 20% in the second quarter of this year versus the same period of last year. So in fact, growth is now increasing. Since mid-2019, when we launched this company, we have achieved the following key milestones. We have established a wholly owned Chinese subsidiary in Shanghai. We have recruited a highly experienced team of FMCG and e-commerce professionals. We have concluded a 5-year renewable exclusive supply agreement with our Italian partner. We have tested the products online up to the end of 2019 when the pandemic interfered with further testing. We have opened e-shops on the major cross-border e-commerce portals and plan to add 2 more before the end of this year, making it possible for cross-border product launches to be ready for February 2021. Why February 2021, by the way? That is Chinese New Year. So we're intending to begin the launch of these products right after the Chinese New Year. 650,000 pounds has already been invested in the company by William, myself, and 3 angel investors. As I stated previously, we've obtained HMRC pre-authorization for sorry, I can't see past the thing at the bottom of the screen. Yes, and we are looking to raise in aggregate 4 million pounds, which will bring us to positive cash generation before the end of 2022. Our sales target for 2024 is just over 40 million pounds, which, as impressive as it may sound, is actually represents only 1/4% of the Chinese market. We will have stable gross margins greater than 60% due to the contracted price structure with our supplier. And we will generate an operating profit by the end of the second year of operation and 6 million pounds of EBIT by 2024. We intend to invest 75% of the funds we are raising into sales and marketing, additional 18% into operations, which is basically working capital, IT, and logistics, and only 7% to corporate overheads. We will be very happy to provide you with additional information, of course, answer your questions, and also provide those of you who are interested to access to our online data room. Thank you very much.
Douglas, thanks very much indeed. That's great. Again, everybody, we're going to open the floor up later on. But in the meantime, if you do have any individual questions or, again, direct contacts that you'd like to make, just please do that through the old chat room. Douglas, I'm going to cut you off for now if I can. We'll come back to you later. Could you just stop sharing your screen for me? Oh, have you? I've still got you. Okay, mine. No, that's fine. That's maybe just you. Sorry. Okay, an old friend of mine. That's the wrong. That's the wrong statement. Joe, are you there?
I am here. Yes.
Right. Again, I hate to harp on about what was the past and what would be the future and everything else, but Joe and I have done a number of events together. Joe runs Bubble, which is a fantastic company. It's everything again's been on hold over the last however many months. Joe is one of the greatest women I've met, and we don't meet that many women, unfortunately, in the founders and the startup world, although we're hoping to change that. But she was also voted one of the most influential women in the UK tech industry in 2019 by Computer Weekly. So I'd like to introduce Joe, and it's great to see you. And again, I'll shut up.
Yeah, because I'm blushing now. I'm going to share my screen with you. Hang on a second. Just get the right screen up. There we go. And let me do this as a presentation. Okay. So hopefully you can all see that. Hopefully I can see you because I've got everyone's faces there as well.
I've got your screen, Joe, don't worry.
Great, thank you. So Bubble is offering a revolutionary approach to location-based mobile marketing, and I can see quite a number of collaborations happening with some of the people who've already presented, actually. Oh, hang on, I'm just going to change screen. Button's not working. We are an award-winning technology. We drive we supercharge any app to drive mobile marketing engagement. So essentially, we're working on geofencing, and we also link that with content, as you will see. Our vision is to enable brands and consumers to create authentic connections based on truth and trust. And this is because the advertising and marketing industry has gone a long way in the wrong direction as far as we're concerned. Just to give you some key highlights right up front, we have a 500k EIS qualifying seed round open. We've got 83 grand secured. We're an experienced team from the marketing industry, so we identified a number of issues that we have sought to solve with this technology. We've had extensive support from Innovate UK to date. We've actually built and deployed our enterprise level platform, launching last December. Great timing, as I'm sure you will realise. We've got a very strong pipeline despite that, with clients onboarding, and we're ready to build commercial value. We have a very clear growth strategy with significant potential returns. So what's the brutal truth about mobile apps? Essentially, it promised a great deal for the advertising and marketing industry. The reality has been overwhelmingly disappointing for app owners in particular. Return on investment's low, fraud is endemic, retention is very poor. I'm sure you all know those stats. If you don't, I can give them to you, sort of if we have a coffee at some point in the near future. Essentially, app engagement is missing the point. It's not requested by users, and in most cases, it's prevented by ad blockers. So we created Bubble, which is a powerful location-triggered mobile marketing platform. It's all about content engagement and giving the brand full control of the campaign trigger. So it's disrupting the ad tech space where ads are pushed to mobile and where there's very little visibility of what's actually going on. And there's very little permissions from the user, and there's also very little visibility of impact data. So Bubble reaches users wherever they are with the content that they want. So we offer advanced conversational notifications, visual, video and audio content, surveys. We can supercharge mobile commerce. We can present footfall analysis based on location. We can give contextual and relational data insights which respect the privacy of the user. We're completely GDPR compliant, and we're building our technology out to support live streaming and augmented reality. And all of this is as a plugin. So it plugs into anybody's app and literally supercharges it. And this has come about because we as a team have all come from the marketing industry. Whether it's Charlotte, my CPO, who's worked across agencies, Mark has worked across a large number of blue chip companies building out platforms in this sort of vein, or myself, having founded several businesses across the PR and marketing industry and innovation. We know what we're doing, we know what the problems are, and we know how to solve them. Key metrics at the moment, 36 grand annual recurring revenue achieved this year. We've got £224,000 worth of annual recurring revenue in letters of intent, and we've got a qualified pipeline with 744,000 sitting there in value that we need to unlock. It's a huge market opportunity. We expect our share of the market to be 31.9 million, which is 0.12% share by 2024. That's the turnover we expect to be reaching at that point. It's a very big industry. It's growing, and it represents 251.6 billion internationally. The growth in this sector is phenomenal. There is an average 24% year-on-year growth, no matter which aspect of this industry you look at. There are lots of current opportunities. We're at a real sweet spot in the industry at the moment. App users are fed up with irrelevant ads. Data legislation's driving a lot of change. You've got lots of e-commerce businesses who are planning to increase their spending across m-commerce to build mobile. That's 58% of those. And content marketing is 62% less expensive than normal advertising to mobile and generates 3 times the number of leads. We know that mobile commerce is going to grow, that we've had lots of evidence of that in the news recently, and also the virtual experience economy is accelerating during this year for obvious reasons. So our positioning, there are people playing with similar technologies in our space, but in very different ways. So in fact, I would go so far as to say their technology isn't actually very close to ours, because most of them were born out of the data end of the industry, and they've been caught up in the scandals, etc., that have happened around companies like Cambridge Analytica, and a focus on the advertising end of the industry. The difference between us and them is we do location, action, time, and event triggers. So our delivery is very contextual. It's plug and play. It's literally 30 minutes to plug our technology into any app, and it's a cloud-based platform that you then work with. We've got a very large feature set, and rich content notifications are the name of the game. 4 key revenue models. It's a SaaS license product, basically, so we're expecting to generate significant recurring revenues. We launch our self-serve model, which is just online self-service Bubble Light, in January. So we're hoping that we will pick up both the lower and the mid-market from those products. And we're finding we're getting a lot of interest at enterprise level as well. So our projections here, as you can see, we're expecting to reach the 31.9 million revenue in 23-24, and essentially we'll be breaking even in October 2022, and you can see there are some other stats. Obviously, if you want to dig deeper into those financials, please ask. So the investment opportunity as it stands, as I said, we're raising 500,000. That's on a pre-money valuation of 2.7 million. Actually, we've had an independent assessment of our valuation done, which put us at 3.8 million. But because we have 83,000 already secured with investors from earlier on this year, I'm honouring the 2.7 valuation to try and get the round closed before Christmas, ideally. We do have a runway at the moment because we've been very lucky with receiving grants, etc., from Innovate UK. And we're also very clear about who potentially we will be exiting to. You can see some of the brands there. We have actually been in conversation with a couple of them. We've got projects running about to start in the new year with Alibaba, and another one that touches Dentsu through Vodafone as well. So we have lots of opportunity to build relationships that will lead to both collaborations and a potential future exit. So essentially what we need to do, we need to build up our onboarding and support tools for the clients that are coming on board. We really want to build our marketing and sales channel partnerships and put some effort into that with marketing and sales directed at those. We still have some elements to do relating to the solution, particularly around the new features. And of course, we have operating costs, which we've managed to cut by not having the need for an office, but we still need to build the team, which is critical. So that's it, folks. We're very passionate about our business. We're at a huge opportunity, and there is a massive drive towards create tech now, and we are one of those businesses that are leading the way. If any investors are interested, please do get in touch with me. So email's there, and I can share contact details. And I'm very up for a coffee next week if anyone wants, of course, if anyone wants to join me. Now what I do is work out how to escape this. Hang on, there we go.
It depends where you are, where you can have a coffee, doesn't it? And I get so confused these days. It's like, if you're here, there, and everywhere, you can't do this, that, and the other. Anyway, let's not get involved with that. Joe, thanks very much. Again, please, I'll encourage anybody, pop some questions in. We'll have a little chat afterwards, a little networking session. The whole idea of this is, this is sort of the beginning of capital raises or halfway through capital raises. Our job is to learn more about you through events like this, and then put you in touch with guys and girls and companies and PE companies, VC companies we know. And that's what we do. Yeah. On that note, I would like to introduce you to Jeff. Jeff, are you there, sir?
Yes, I am.
Jeff Warburton from Express HR. Again, I'll turn my mic off and let you have the stage.
Thank you. Hopefully you can see my screen.
Yep, we've got it.
Okay, Express HR, I guess the clue is in the HR bit. and what we are launching next year are marketplaces to manage the engagement of temporary workers in 3 key industries. The key industries that we're targeting are healthcare, construction, and hospitality. And we think that the post-COVID situation next year will be ripe for engaging temporary workforces. And we're already seeing the indication that temporary placement of workers is increasing, whereas permanent placements are declining. The 3 sectors we've chosen are the ones that engage large numbers of temporary and contract workers. And indeed, there are also sectors where there's huge investment involved. Healthcare obviously is constantly increasing, and also the construction sector has huge investment in infrastructure projects coming up in the future years. So growth is guaranteed. And the problem that we're solving is the fragmentation of the industry. There's no easy way for employers to engage freelance and temporary workers. Yes, they can go through agencies or they can attempt to direct, but there are over 12,000 agencies providing a range of different workers in different parts of the country in different skills. And what we're going to do is present a marketplace whereby there's one resourcing platform that connects all parties with simple responsive interfaces from any device that they choose to use, and gives them the capability to engage in the marketplace in a way that they wish to do so. We're not a startup, we're a restartup. What we've done during COVID is pivot. So we have the technology currently to manage the engagement of temporary workers from agencies, and we're extending that into managing talent pools and managing compliance processes. So we're fleshing out the platform so that we can offer these marketplaces from a technology that's already proven. So the sort of customers that we already have are there in sort of construction and healthcare. So the platform is already in use. The markets we've chosen are large. Healthcare, over 2 million workers. We think 5% are temporary, i.e. locum and bank workers, and we set ourselves a modest goal of 12% of that, with a growth rate in the first year of only 100 per month, and then increasing from there. Same story in the construction market, similar size, similar addressable market, similar growth rate anticipated, but following 6 months after healthcare, because we're going to do healthcare first. We have a recurring revenue model, and where we start with relatively low value transactions, where we're providing services to the agencies that are active in the market, and then we move up to more models whereby we're replacing agencies and increasing the value of the transactions accordingly. So the revenues that we anticipate generating are those with a substantial EBIT in year 3, based on relatively fixed cost base. We're looking to raise £300,000 because we need more people. The people that we need, not so much technical. Most of the development work is done. We're not needing to write much more code, but we are needing to develop digital marketing and business development resources in order to grow the business. We have a team currently of 3. myself, I'm the sort of tech guy. Despite my age, I'm still a bit of a nerd. I've recruited sector experts that know the sectors that we're targeting. We've got Jim from the construction sector and Dave from the healthcare sector. Still need to find one from the hospitality sector, but I've got time to do that, and I don't envisage that being a problem. We're looking to raise £300,000. We've applied for EIS. And we're offering 10% based on a valuation of 3 million. The 3 million is based on the spend of the investment already made in the platform. We're looking to release the healthcare products in Q1 next year, and the construction in mid-year, and the hospitality platform by the end of the year. We think that the post-COVID environment next year will create an ideal opportunity for launching marketplaces. There's never a better opportunity to be in the recruitment business when you're coming out of a recession, and obviously we're in a deep recession. I've been through a few, yes, so the post-recession is the most best time to be in the recruitment. There's not a lot of competition. Agencies have slimmed down. There's lots of workers around. They're actively seeking jobs. Their expectations are modest, and employers need to increase their workforce and but unlikely to commit to permanent placements until the economy is on a sounder footing. So if you would like to know more, please contact me. I'm jeff.warburton@expresshr.com. Thanks for your time.
Hi, Jeff. Many thanks indeed. Again, if you've got the deck, if you want to pop it into the chat, all you need to do is click on chat, find it on your desktop, or I can do it for you tomorrow, and away we go.
Okay, will do. Thank you.
Yeah. No, thank you very much indeed. Right, we got two left. We got Stephen Wheatley from Here Angel. Stephen, are you there?
I am. Can you hear me?
I can, sir. Hopefully, that's
Poor
what you're all
you.
about, isn't it?
Poor old you, I say.
Okay, and then just after Stephen, I've got my business partner who's in Dubai. He runs a private equity fund, so we'd like to open up some questions, and also he will explain very quickly what we do, or what he does, and where they place investments. So sorry, Stephen, I will let you carry on. Please ignore me for a minute. Let me turn that off.
Ready to go? First of all, good evening, everybody, if indeed it is evening where you are. Thank you for coming along this evening. So my name's Stephen Wheatley. I'm CEO of a business called Here Angel. So it should sound good. Think about your hearing for a moment. A few typical examples of where your hearing is important: going out with friends for a meal, transacting with people, going to pubs, going to concerts, watching television, enjoying the theatre. Have a think for a moment what it might be like if you had problems with your hearing. We're facing some very, very serious problems with our hearing. On the left, you can see what is fairly typical in normal times, I might add, it's probably not happening quite as much at the moment, is people wearing headphones. Actually, due to COVID, they're probably wearing headphones more frequently, particularly if you're in shared accommodation, and they are actually wearing them for longer. I've been talking to friends who have children who are being homeschooled. They're wearing headphones for 4 to 6 hours a day for their homeschooling. And then when they finish that, they're then watching Netflix or going gaming. So they're wearing headphones for considerable periods of time. And frankly, our ears are just not designed for it. And unfortunately, the World Health Organization and many others are forecasting that you can go from wearing headphones in your 20s to wearing hearing aids in your 50s. And with a life expectancy for most of us, hopefully, somewhere in our 80s or 90s, we could be expecting to live for 40 or 50 years with damaged hearing. So still sounding good? No, no. Can you imagine going to the pub and not hearing the banter? I don't think I'd want to go. I would like to be able to transact with people in a normal way. Going to the theatre and not being able to hear, that doesn't sound like much fun, does it? Or going to a concert and not being able to hear it properly. So this is the problem. So what's the solution? So our business is called Hear Angel, and we develop systems that safeguard your hearing. And the way to do this is to provide the users with information. At the present moment, you can pick up a pair of headphones, pair of wireless headphones, something like this, absolutely sound fantastic, but they give you no information whatsoever about your exposure. So we give you information to let you manage your hearing and that of your children. And then this is deployed in the firmware of the headphones. So looking at the small graphic there, the headphones here are wireless. They have batteries, they have electronics within them. Our solution is deployed as firmware in those headphones and tethered to a handset, which is used then to display the information and provide guidance to the user. Hear Angel meets the latest safety regulations and safety standards and has been described as a Fitbit for your ears. So what are the market conditions? Well, the headphone market is growing. It's exceeded all expectations in the last 12 months and is expected to breach the 450 million pieces. And to be clear, this excludes the cheap headphones that come with your mobile phone. These are aftermarket quality headphones. There's increasing awareness amongst consumers. We've done research which suggests nearly 70% of headphone users are aware of the issue, and over 80% of parents say they would like to manage and monitor their children's exposure. It's such an issue that the World Health Organization has crystallized a campaign which is designed to increase the awareness of the risks amongst the target group 12 to 35-year-olds. They've gone to extraordinary extents here. They've actually produced a safety standard. We sit on the committee that has developed it, and that safety standard has been introduced and is now been adopted by Apple, which has fired the starting gun for all the other wireless headphone manufacturers. And that's where the demand is coming from. So who are we talking to? Sadly, I can't tell you their names because we're under NDA and confidentiality with them. But if we take number 3 on that list, I can tell you we now have a signed distribution agreement with that organization, and we have letters of intent from 3 others. We're also part of the Qualcomm extension program, which guarantees when our firmware is available that it'll work on Qualcomm chipsets. So if you're a CTO in a headphone company using Qualcomm products, you would want to use our solution because it's guaranteed to work on the Qualcomm product. So who's going to deliver this? It's not going to deliver itself. So here's the team. You've met me briefly. I have a colleague, Richard Glover, who has 40 years of experience in audio electronics and intellectual property. I have 2 non-executive directors who provide guidance and governance. One of them is also our virtual CFO. We also have specialists. One of the other presenters mentioned the mercenaries, if you like. These are people who are working for us, but only when we need them to. We've recruited David Hargreaves, who used to work for Qualcomm and is ideally placed to help us move our product onto their firmware, onto their silicon. Peter Langley, he runs an intellectual property business called Origin, and he has done the intellectual property for us, much of it in exchange for equity in our business. So I would suggest he believes in the intellectual property we've applied for, and he believes in our project. Tony Wright is the Emeritus Professor of Otolaryngology at the University College London, possibly the most difficult thing I've ever had to learn to say. But he's an expert in this field, and he sees all of our presentations and all of the scientific philosophy behind what we're doing. We're also going to recruit a licensing specialist to help us in converting our firmware into license agreements with consumer electronics companies. So what do we need and where is the exit? Investing in a business is supposedly like getting on an aircraft. You need to know where the exit is very soon after joining, and you should work out where that exit is. We've so far raised £1.4 million in the last 10 years. We have a business in the occupational health sector. We're currently a supplier of products to the BBC, the Canadian Parliament, and a number of NATO forces helicopter organisations. We're raising 500k in this round sterling for 15% of the company. EIS is being applied for, and the principal use of the funds is to take our designs and our algorithms and to port them onto the Qualcomm silicon so we can start to license them to Qualcomm's hundreds and hundreds of wireless headphone customers, manufacturers around the world. We've also mentioned the requirement for business development support, and then infrastructure, which is primarily project management between the technical teams within the client companies, the wireless headphone companies, and ourselves. And we imagine that the exit is likely through a trade sale to a similar to a firmware company. And we've already got one or two of them making eyes at us, but we're trying to hold off. And finally, there is a social impact. We're going to make sure that it sounds good for hundreds of millions of adults and children who use headphones. Thank you.
Stephen, thanks very much indeed. That was great. Very interesting. We had a conversation the other day, and I know about the concept of decibels and everything else now, which I never knew anything else before. So I really appreciate that. Again, what we're going to do, we're going to wrap up. My business partner who's in Dubai runs a private equity fund. They invest in obviously startups, early stage companies and such like. So I'm going to open the board to Craig. He's going to briefly explain what we do. One of the reasons we do exponential events is to get companies in front of ourselves, for want of a better word, that we or he can then look at perhaps investing in through the private equity fund that he runs. So I'll open the floor to Craig. I'll again shut up, and then we can have a little chat afterwards. I mean, this can run on for another half an hour or so afterwards with just people having a general chat. So Craig, are you there?
Yeah, thanks, Neil. Yeah, just to reiterate what Neil said, we've got the Exponential Genesis Fund and Exponential Asset Management. We originally set that up to be able to cherry pick investment opportunities from early stage companies that we could then invest in and then move along and take them to the capital markets. Hold on, I'll load a short video for those that have seen it before. I apologise, but I'll make you go through it one more time. It's not long. For those that haven't seen it, you can have a look. It sort of gives you a clear picture of what we look to do. If I can just find it for you. Can you see my screen now? Neil?
No, I can't see your screen. I can see you.
Handy.
You should be able to share. I don't think I've.
Just one, I think it's my computer. 1 second. Just bear with me. For some reason, it's not letting me. Letting me load this up. Which is unusual. might need to try and reboot this. Neil, should do me a favour, just start a bit of a chat amongst yourselves, and then I'll
Yeah, okay.
put this. I'll put this up, and then I need to restart it, I think.
Okay. We've got some polls out there. Anybody else want to add some more information to the polls? The interesting thing, obviously, investors that we've got at the moment, and again, this is completely anonymous as far as everybody goes. Investors that are looking at early stage startup companies, 67% of them are looking for some sort of SEIS, EIS, advanced assurance or assurance to invest. Although, funny enough, 33% work on the basis that if the deal's right, they don't care. Yeah, which I think it's very important, because not all companies are going to have SEIS or EIS, and for people who don't know about that, it's the UK tax advantages for individuals to invest in a startup or an early stage company, and they get all sorts of, well, under SEIS they get like a 50% tax write-off if something happens. It's ex capital gains and such like. So that's quite interesting. We find we work a lot with Seed Legals, who are one of the UK's largest legal sides of, or disrupting the legal startups in the UK. They're up to sort of like 80% of their investors won't invest in a company unless it is got some sort of tax advantages. But so I suppose at 67% tonight, we're not far off that one really. I'm not going to tell you who's the most famous pitch deck tonight. That's again, it's something we don't reveal. We will reveal it to the companies, but Craig, have you found what you're looking for yet? Or hang on, I'll try and find it for you. Let me share my screen. Oh, I don't know. I've lost you now. I can't hear you. You've gone. Oh, hang on. I can't hear. You're muted, Craig.
Can you hear me now? It's
yeah.
It's not that I can't find it. It's just it just won't let me put it up. So I don't know if you've got a copy of it, you can stick it on. If not, I'll just chat.
Okay. Well, let's go through some questions. We've got some sort of chat questions going on here. I'll try and find it for you. Give me a second. A minute. Question. Let me. You have a chat about the fund. I'll find a video. Give me a few minutes.
Well, obviously, from the fund's point of view, what we're looking to participate in is early stage companies that have got an exit plan in place. And what I mean by that is it's your startup, it's your dream. It's not ours or our co-investors' dream. So what we like to do is have a stage plan where going to the capital markets is traditionally what we're looking to do, to see you take IPO and for us to be able to get out. So what we like to do is be able to come in, participate with an investment whereby that capital goes towards the expenses of doing your listing, and what we will help you do alongside that is syndicate the finance required to go public through our network and other participants and funds that want share in that similar vision. For us all to have a similar goal. It's not that we don't support people's aims and goals to stay private and maintain that that framework. It's just as an investor, we like to be able to see what the point of entry and what the point of exit will be, and if we can secure those guidelines, it helps our investors and it helps our syndicated finance partners know what the game is and how long they're in and how long they're anticipated to be in for. So that's the focus. In terms of sectors, we're sector agnostic. We're open to everything. Don't chase unicorns. Everybody likes to talk about 100x and 100x returns and we're going to be the next unicorn and everything else, but not interested. That's someone else's dream. We like to be, as I say, fairly focused, entry and exit, short time frame as possible. And that's where we look to do. In terms of ticket size, we're not constrained. We're not constrained by that from our syndicated finance partners. We're open to everything. So, in terms of geographies as well, we're again open to everything. It makes it more exciting if you guys are looking to cross borders and go to different territories and penetrate different markets from there. That's equally appealing, as much as the SEIS and EIS advantages are there for UK investors. The world's a big place, and there's more capital out there than just the UK, and people are always looking for stories that transcend borders. Does anyone have any? I don't know if Neil's going to be able to find a video. Neil, you there? Can't find it. It's not a problem. Does anyone have any questions for us, or anything that we can help with, or the floor is open for questions, really?
Hi, Greg. Do you mind if I ask a quick question?
Surely.
So how long do you usually expect a startup to exit after you put in the money? Like, what's the time frame that you look at?
Depending, obviously we don't want to do all the heavy lifting, so there's no point in us just being the sole investor to take it to the capital markets. From there, we need some people to come in after us so that we can make money as well. So, depending on the exchange and how much you need to raise, if originally when we were looking at it was the next exchange, which is now the Aquis exchange. So from an early stage company to a listing, it can be done inside 6 months. But it depends on the individuals, and those people have to be able to look at a company going from private sector to public sector to public company. It's not for everyone, and those individuals, what we don't want to be is the guys telling the CEOs and the founders that they're no longer the people for the job and cancelling people's dreams. It's not really. There's enough companies out there to invest in without doing that. So in terms of criteria, that's a key point, because standing up and doing a pitch event like this is one thing. Standing up, in front of an AGM in front of lots of investors is a different matter. So, so that's in terms of time frame. The shorter the better for us, because we know that there's an exit opportunity. Not that we have to exit at any given point, but it just creates that window, and it helps everyone.
Yeah.
Sure, Alan's got his hand up. Fire away.
Hi. Good to meet you, Craig. At what stage? So you're investing, you say early stage, pre-revenue, post-revenue. Is there any particular criteria that you look for there?
The route to market is key for it all, really. There's a lot in terms of public companies out there. There's a lot of public companies that have never made any money and have got an exceptionally high valuation. So it doesn't need to be bound by revenue.
Okay.
Just the metrics and the scalability and the people, and also the not just the interest from us, because sometimes we can personally get on with people and think it's going to be a great idea and what's not, but it needs the syndicated interest from others needs to sort of be there as well. So it needs to tick a few boxes for the others coming into the party as well.
Okay, and do you follow on as well?
We're not against following on. To be honest, what we do with the syndicated finances if we're funding to IPO or helping fund to IPO, there's some better boys that will come to the party rather than us that we'll put there, and that's all they're bound to do. They're limited by their fund options is what their fund is set up to do, basically. So we try and do those, and they're repeat investors for sure.
Okay, great. It'd be nice to follow up with you.
Sure.
Craig, I'm sharing the video in the chat, so hopefully it should be.
I hope it doesn't disappoint everybody now after they've been waiting for so long.
No, it's in the chat, so anybody can download it.
Yes,
yeah?
Perfect. That makes it easy. That makes it easy. That was a good idea. I should have done that.
It's called the Genesis Fund video, whatever, to everybody. Yeah. I suppose for the guys who don't know us, as I say, what we do is we run things like this. It's not our forte. Our forte is to actually meet people, because then I can say to somebody, Craig, meet Fred, or Fred, meet Jim, and such like, because we know what field you're in. Yeah. And I mean, the good news with that is that hopefully, say hopefully, soon we're going to be back into that scenario. So we can sit in a club in London, which we take over for the night, and go, right, you're looking for this, meet Craig or meet Fred or whatever it might be. The virtual ones are funny. What it does is gets you out there, but I suppose it's just the beginning, and the interactive parts come later. Yeah. Alan, I'm very interested in Yeo. Obviously, if Tim's still around, there's some guys on here who we know, but it's so much better. Mate. Hi, Tim. How are you?
Very well, thanks. You?
Yeah, good. It's just, I wouldn't say difficult. Well, I suppose it is difficult, though, if you want to be honest, over virtuals, to get everybody together. Yeah. I can say, Tim, thanks for the introduction. And I know that I can introduce a so-and-so, 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 but that's going to come off the back of this rather than necessarily this. And it's even the same to a certain extent in actual events. Yeah. We're not limited to who's in a room. Yep. We're limited, I suppose, to who we know, but then Craig and I, over the years, know, and I won't mention he can't be mentioned and anything else, but know a lot of people, yeah, as I'm sure you do and everybody else does, and it's all about introductions. Yeah, and that's my video on, so you see me. Can't set the video going. There we go. That's, to me, what it's all about. Sorry?
I'm just asking if anyone else has got any more questions.
Yeah, sorry, yeah.
Just okay, no, I don't see anything.
Where's John? John, are you there? John Newlands?
John's been hiding.
I know he's been hiding. John, where are you? It's a shame.
Oh,
oh, there you are.
Wow.
Are you there?
You know me, Neil and Craig. It's lovely to see you. As you know, I'm not exactly a shrinking violet, but technology somewhat inhibits me.
Hey, John, it's lovely. Well, we can't see you, but it's lovely to hear from you.
Well, you know, I've got a face for radio, so that's a blessing to you all.
Me too. Me too.
I can't wait to get together with you in London when all this stuff goes. How are you going? You okay?
Yeah, no, tickety-boo, very busy. Lots of crazy things, but like you, I can't wait to meet in the flesh again. This is not, I'm really not temperamentally suited to working from home.
You need to turn your volume up a little bit, John. Can't hear you.
I'm not temperamentally suited to working from home, and I can't wait to get back into the city for a few good stiff drinks.
Yeah, perfect. Well, we'd love to see you and work the old network that we used to work, yeah?
Absolutely. But well done, chaps, for keeping it going.
Yeah, well, thanks very much. John,
Thanks, John.
Look, as I say, we'll send you a separate contact, but it'd be great to hopefully get physically together soon.
You bet. Let's do it.
Yeah?
Yep.
Thanks, John. Take care.
Yeah. Right. Anybody got questions they want to flick across the board or? Tim, I've got a guy on a completely separate thing altogether. I've got a guy who's looking at buying up some pubs in the UK for restaurant concepts, if you're interested.
Thanks, Neil. Really not a great time to be.
Well, I think it's a great time to be buying. It's a great time to be buying them, perhaps not owning them.
Great time to be buying the pubs and converting them into houses, I would have thought.
Well, that's one of the things we're looking at through the fund, funny enough.
Yeah, very interesting area.
Buying up probably more Midlands concept pubs, which are massive with big car parks.
Yeah.
And flicking them to flats and such like. We last year, just whilst we're having a conversation, if everybody's all right, we were looking at a couple of concepts for pub restaurants in the UK through a Japanese chef and a mixologist, a guy called Shinzo Goken, who's the mixologist, right? He runs like #1 bar in New York and #1 bar in Tokyo, and Akira Bak, a Japanese chef who's got the Yellow Tail in Vegas and a few other Michelin stars restaurants. We were looking at doing something, and of course that all went westwards, shall we say. But we had the funds. We had the funds in place, Tim, to buy in hotels.
Yeah, I'm sure. I'm sure. Again, valuations have gone through the floor. I'm sure that there are various people city-based, aren't there, that are raising exactly that at the moment, putting funds together to buy distressed assets. And
oh no, I mean, even worse. We're in New York. Yeah, with these guys. Yeah, it was just. And I don't know, I still think a market's there. I mean, we were looking also at buying up some golf courses in the UK.
Probably
on the Japanese angle, and selling them as not so much fractionals, but a high-end package to the Japanese flying into the UK, which I still think will work.
Potentially, yeah, absolutely.
Yeah. But we'll have a conversation about that separately, because I know that's not necessarily tonight's conversation. But...
Love to, Neil.
Yeah. Right. Well, unless anybody else wants to have a chat, Joe, hopefully end of Feb, March, going to see you. Yeah.
Yeah, that'd be good.
I'm hiding myself away, not so much for anything else, and the fact that I'm staying at my mother's house in the UK. She's 83. I haven't seen my daughter since end of Feb, who's in Thailand because I can't get in. It's just a bloody nightmare.
Yeah, I can imagine.
Yeah. But,
well, maybe we should have a video call next week.
Oh, definitely. Yeah. I'm happy to come and have a coffee or something, you know, because it's just driving. I think it's driving everybody crazy. Yeah.
We can walk the dog. We're allowed to do that.
I don't have a dog, but I can share you. I'll share yours.
Perfect. Right, Neil, any more questions from anyone?
Alan, sorry, go on, Joe.
Three of the other companies that have presented and I are going to connect. So well done on that.
Oh, that's good. Excellent.
There you go.
I did say that there's lots of potential collaboration. I think several people saw it straight off. So
yeah,
don't miss an opportunity, Joe. Quite right.
We are going to pursue those. So.
That's what it's all about. That's you know me. That's what we do.
Yeah.
Yeah.
Absolutely.
Alan and Tim, thanks very much indeed. We guys need to have a separate conversation to everybody else. Yeah.
Yeah. Great. Thank you.
Right.
Okay. Look forward to speaking to you.
All right.
And you, sir. Yeah.
I've got to dive, I'm afraid. So please forgive me. Thanks very much for hosting, Neil. Nice to meet you, Craig.
Thank you all.
Yeah, and you guys. Thanks very much for your time.
Take care. See you guys.
All the best now.
Thanks a lot.
Right, Neil, I'm going to dash as well. See you later, everybody. Take care.
All right. Cheers. Thank you very much indeed, everybody who attended.